And then the computing power of the Bitcoin network, also known as the mining hash rate, hit a record high on Christmas Day, adding to the challenges faced by miners in the 2 degrees in wake of declining profitability. Blockchain.com reported that on December 25th, Bitcoin's hash rate achieved an unprecedented level of 544 exahashes per second, a data point corroborated by BitInfo charts, which recorded an average hash rate peak over the weekend. This development occurs against the backdrop of a substantial increase in network hash rates throughout the year, surging by 130% since January. Photo block, and while high hash rate may be beneficial for theoretical price models like implied hash adjusted price, it poses challenges for miners who now face increased competition to secure the next block. The hash price, a metric indicating profitability, is declined in the past week due to a waning interest in BRC-20 ordinal inscription. As of now, the hash price stands at 9 cents per terahashes per second per day, according to Hashrate Index. Profitability has experienced a 34% decline since reaching its peak of $10,056 per second. Hash price tends to surge during periods of increased demand, leading to elevated transaction fees, as seen in the recent frenzy of inscriptions. In another development, those seeking approval for a spot Bitcoin exchange-traded fund must complete their filings within the next few days to adhere to the impending deadline set by the United States Securities and Exchange Commission, and the SEC has stipulated that applicants for spot Bitcoin ETFs must submit final S1 amendments by December 29th, as reported by Reuters, based on information from public memos. Individuals familiar with the discussions, the anticipated approval of a Bitcoin spot ETF by the SEC is a pivotal development poised to attract significant institutional capital. If realized in 2024, experts project over $240, $600 billion flowing into Bitcoin in the first year post-approval. This influx, coupled with diminished selling pressure from miners, may drive a substantial price surge, potentially pushing Bitcoin into six-figure territory. Despite the positive outlook, concern persists about heightened volatility, with increased involvement of traditional market players in Bitcoin's dynamics. And adding to the intrigue is Bitcoin's impending block reward, which is scheduled for April 2024. This event halves the Bitcoins rewarded to miners, reducing supply issuance. But historically, such halving have sparked significant price surges, creating a favorable supply-demand imbalance in favor of buyers.